And welcome to The Bottom Line, where we unpack some of the main business and economic stories of the day. Following Poland's Monetary Policy Council meeting earlier this month, the National Bank's governor, Adam Glapiński, made a U-turn statement regarding Poland's high interest rates not being cut until 2026. Since then, quite a few members of the council have openly spoken against this position. I'm now joined by Ignacy Morawski, economist at Puls Biznesu, to tell us a bit more about the cacophony of voices driving Polish monetary policy. Hello, and thank you very much for joining us again.
Hello, good afternoon.
So Glapiński's U-turn, actually a second one in 2 months, because previously he had said that there would be no cuts until 2026. Then he softened his position. Now he seems to have flipped again. What are the reasons for all these changes? Why has the U-turn suddenly taken most people by surprise?
Well, I think that in November, most analysts gradually adjusted to the fact that we would see interest rates cuts in Poland pretty soon. And Governor Adam Glapiński supported that narrative in November. At the beginning of November, he basically said that within a couple of months, and probably in March, the discussion about loosening of monetary policy in Poland would begin. He didn't clarify, obviously, whether the interest rate cuts will occur, but at least the discussion would begin. However, at the beginning of December, he changed his mind, and he gave a very hawkish speech, underlining risks to inflation, threats to inflation stability, and saying that the earliest moment to discuss interest rates cuts would be the October of next year, and probable interest rate cuts will take place only in 2026. Now, it is very difficult to point the exact macroeconomic reasons which led to such a drastic turnaround, actually. One might say that inflationary data are not very encouraging, because inflation is still running at close to 5%. The recent data about inflation in November showed the rate at 4.7, so it's pretty high. But I don't think that the inflation picture has changed a lot between November and December. So it's very difficult to say why Adam Glapiński has changed his mind about discussing interest rates cuts. I think that it caused a bit of confusion on the market. And when you look at interest rates contracts, you see that expectations for the first interest rates cuts have been moved more towards the middle of 2025. But still, most investors believe that the easing cycle in Poland will begin next year.
But there has been a lot of confusion that has followed his statement. Other members of the council have spoken to the media quite broadly, and analysts have actually questioned his stance. And also one of the members of the Policy Council, Dr. Ludwik Kotecki, has openly said that the governor, Adam Glapiński, has breached their gentleman's agreement. So in the interview in the past week, Kotecki has said that the plan was to strategically discuss interest rate cuts in March 2025. And this in itself has served as forward guidance for markets. What are your comments in regards to that?
To me, it seems that there is a political conflict within the Monetary Policy Council. And it seems that some political factors may influence Governor Glapiński's thinking. So basically, there is a conflict around the central bank in Poland. Central bank is accused by the governing party and by the government officials of conducting or making mistakes in monetary policy in past years, and the governing party, the Civic Coalition, would like to see Glapiński put in front of the State Tribunal and accused of breaching the law, of misconducting monetary policy. So I think that Glapiński sort of recoils and he reacts to the political pressure, and he gives very soft signals to the government that the more they push politically the governor, the more the government accuses Mr. Glapiński of wrongdoing in the past years, the less willing to ease monetary policy Glapiński will be. Right. So to me, it seems that it is a kind of political struggle between the governor of the central bank and the government. And hopefully this struggle will not explode into some harmful conflict, harmful for the economy. Because in the bad scenario, when we will have an increasing struggle and conflict and quarrel between the central bank and the government, I think it might make more difficult for the Monetary Policy Council to look at monetary policy in a cold manner, right? To reflect on monetary policy decisions regardless of political factors. So heating up of the political conflict will put risk on rational monetary policy.
Absolutely. So there has been awareness that there is tension between the central bank and the government. But obviously, when it comes to the council itself, they vote on the decisions that are made. But if Glapiński says one thing and the members, the policymakers say another, who is it that calls the shots? At the end of the day, the Monetary Policy Council votes on the rate level. So what really happens behind the scenes? Because if we have gentlemanly agreements taking place, what's actually going on?
Well, on the one hand, you may have gentlemen agreements between Monetary Policy Council members. On the other hand, we are entering a very hectic political period in Poland because we are 5 or 6 months before presidential elections. And it seems that both inflation and interest rates will be one of the themes of the presidential campaign. So one of the candidates, the one close to the government, Rafał Trzaskowski, openly accused the governor of the central bank, Adam Glapiński, in his inauguration speech, inauguration as a presidential candidate, of wrongdoing, of misconduct in monetary policy, of making bad decisions, of causing high inflation. And now he accused Glapiński of being reluctant to interest rates cuts because of the political factors. So it seems that even if there is a certain agreement between Monetary Policy Council members to cool down things and to speak very calmly about monetary policy, then the environment, the political environment, is very challenging for monetary policy because both inflation and interest rate levels will be discussed politically. And to me, it seems that the more the governor of the central bank will be pushed into the corner, the more he will be accused by politicians, the more he will recoil, and he will be more reluctant to consider easing of monetary policy. So it seems to me that politics will influence monetary policy in Poland over the next couple of months and will prevent the central bank from cutting interest rates, right? On the other hand, some economists, even those aligned with the governing party, think that cutting interest rates today in Poland would be still a bad move because inflation is running close to 5%. So even if Glapiński is driven to some extent, we don't know to what extent, but to some extent, by political considerations, his decision or the decision of MPC, Monetary Policy Council, to keep rates stable might be justified by the level of inflation, right? So I think both economic discussion and political discussion is very complex nowadays in Poland.
But is there a majority on the council that supports cutting the interest rates at the moment?
At the moment, no. I think nobody at the MPC, so at the Monetary Policy Council, would support interest rate cut today. However, some of them some of them are willing to discuss such a move in March, when we will have a next inflation projection, inflation report. Right? So the inflation report is a very important macroeconomic document in which the central bank gives his macroeconomic projections, and it forms the basis for the discussion about the path of interest rates. So in March, the next inflation report will be published, and some of the MPC members are willing to discuss easing of monetary policy in March. Whether there will be majority for that move, I don't think so.
But based on what we have heard and what has been in the media, it appears that Glapiński no longer considers March 2025 as a viable time.
Yes.
Or even the first half of the year. Is it only from October 2025 onwards that we can even consider any cuts?
It's very difficult to predict whether it will be October or July. My view is that we will have a lot of pressure on Polish Central Bank, because both European Central Bank will cut interest rates and the Federal Reserve will cut interest rates. It will put pressure on Polish Central Bank through exchange rate, right? So there will be pressure. After the hawkish comments from the governor, I think that March is excluded. You can't expect interest rates cuts in March. But at the same time, I suppose that waiting until 2026 with easing of the monetary policy will be too long. I mean, economy is not very hot. It's not even hot. Actually, the GDP growth is a bit disappointing recently. Domestic demand is a bit disappointing. Consumption is stagnating. Investments are weak. So in this environment, I suppose, and considering the fact that other central banks are cutting interest rates, I suppose that probably from the middle of the next year, there will be possibility of discussing interest rates cuts. And we will be after presidential elections. So maybe those political factors, if they play any role, I'm not sure, but if they play any role, they will be excluded, removed from the table.
Okay, so by the looks of it, we're heading into...
My view now is that July is probably the moment when they will discuss interest rate cuts.
Okay. Okay, looks like we're going into a very political situation with these interest rates. Okay, Ignacy Morawski, thank you so much for joining us again.
Thank you very much.
And that was Ignacy Morawski, economist at Puls Biznesu. Thank you so much for joining us today. I was your host, Marie Cato. Join us every weekday for Business Arena at 5 p.m. CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and features, stay with us on TVP World. Goodbye.